Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your money. I'm your host, Lewis, and I'll be guiding you through the latest news and trends that affect your financial well-being. Today, we're talking about retirement savings, specifically for members of Generation X who may have started saving a bit later than they would have liked. As the oldest members of Gen X are turning 60, retirement is no longer a distant milestone, but rather a pressing concern. According to a recent survey by Nationwide Financial, 61% of Gen X investors who aren't retired didn't view retirement as an urgent priority until after age 50. Now, starting to prioritize retirement savings at age 50 isn't too late, but it does mean that these individuals will have to make some adjustments to catch up. Suzanne Ricklin, Vice President of Retention and Sales at Nationwide Financial, recommends meeting with a financial professional to develop a plan to get your retirement savings back on track. So, what are some ways that Gen X can make up for lost time? Well, according to the survey, 40% of respondents cut discretionary spending, 34% increased contributions to retirement accounts, and 23% sought professional financial advice. Other strategies include exploring new income sources and shifting investment strategy to reduce risk. It's worth noting that there is no one-size-fits-all solution for financial planning, as everyone's retirement goals and financial circumstances are different. However, by taking action now and making some adjustments, Gen Xers can still retire comfortably even if they started saving a bit later than they would have liked. We'll be exploring more of these strategies and discussing the implications of starting retirement savings late in future segments. But for now, it's clear that with the right planning and advice, anyone can get their retirement savings back on track, regardless of when they start. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and market trends. Today, we're looking at a significant shift in the stock market, with chip makers and data storage companies leading the charge. KLA Corp, Applied Materials, and Lam Research saw substantial gains, with some rising over 5%. This surge is largely attributed to increased demand for their products, driving innovation in the tech industry. On the energy front, producers and service providers like Valero Energy, SLB, and Halliburton experienced notable increases, reacting to President Trump's announcement regarding U.S. involvement in Venezuela. The news sparked a rally in oil prices, affecting various sectors within the market. Meanwhile, mining stocks also saw an uptick, with gold, copper, and silver prices rising. Kerr Mining, Hecla Mining, and Freeport-McMoRan were among those that benefited from this trend. In contrast, drug makers like AbbVie, Eli Lilly, and Amgen faced declines, reflecting the ongoing challenges within the pharmaceutical sector. Other notable movements include Coinbase Global, Galaxy Digital Holdings, and Mara Holdings, which rose significantly, potentially due to increased interest in digital currencies. On the other hand, Versant Media Group experienced a decline following its separation from Comcast Corp. As we navigate these market fluctuations, it's essential to consider multiple perspectives and stay informed about the latest developments. The financial landscape is constantly evolving, with various factors influencing stock prices and industry trends. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a look at the latest developments in the financial markets. As we dive into the new year, investors are keeping a close eye on interest rates, employment data, and geopolitical events that could impact their portfolios. We've seen some notable moves in the Treasury market, with yields fluctuating in response to economic data and corporate bond issuances. The ISM manufacturing gauge came in lower than expected, which could be a sign of slowing economic growth. However, the related employment index rose, which is a positive indicator for the labor market. Meanwhile, the Federal Reserve is expected to continue cutting interest rates in response to weakening labor market conditions. money markets are pricing in 2/4-point Fed rate cuts in 2026, with a 30% chance of a third cut later in the year. It's also worth noting that geopolitical tensions are back in the spotlight, with the situation in Venezuela causing uncertainty in the oil market. While crude futures prices initially fell on the prospect of a rebound in Venezuelan production, investors are still cautious about the potential impact on global markets. As we navigate these complex and interconnected markets, it's essential to stay informed and adapt to changing conditions. Whether you're a seasoned investor or just starting out, it's crucial to have a well-diversified portfolio and a long-term perspective. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.